I'm seeing a lot of bad advice being thrown around these days, unfortunately, of clients that are in 2 to 3% and their loan amount is like 200 grand and they only can pull out like 100 grand. They're calling these big shops and they're telling them, "Hey, just refinance the full thing and
No.
at like a
Oh,
6%, at like a 5.5%, right?"
that's
And
horrible advice. Horrible
it
advice. Alrighty, folks, we are about to start a refi boom. And I'm not talking a rate and term, marry the house, date the rate nonsense. I am talking about cash out refi. Homeowners are currently sitting on a record $55 trillion in home equity. And I believe we are going to see half a trillion to $1 trillion in home equity extracted cash, cold, hard cash extracted in the next 6 to 12 months. I want to know what's going on with the guys in the trenches. What is already happening? Are we just seeing marry the house, date the rate refis, or are people going to get those big checks? Jonathan, what's going on, man?
This is the time. I'm good. I'm good. We're busy. Busy,
I
busy,
bet
busy,
you
but I
are.
love it.
The refi
Yeah.
boom is happening, man. It is. And the gun is sounded. People are lining up. Go, go, go.
It's almost like every single time this happens, there's a little bit of a fire drill, and everybody waits a little bit. They pause and they're like, "Is this a drill or is this real?" And then they start stampeding.
Yeah.
Because if you remember at the beginning of the year, we had this as well, right?
Yeah, a
Where
little
people were
moment.
trying to pull out.
Yeah.
People are trying to capture and pulling, all this equity out. It's absolutely true, right? A lot of people are doing so. But now it comes down to more so the calculation that we bring up every time. We haven't actually talked about it for a while. But do you do a second loan or a
Correct.
HELOC or like whatever loan you're in, or do you do just the first, right? Because I'm seeing a lot of bad advice being thrown around these days, unfortunately, of clients that are in 2 to 3% and their loan amount is like 200 grand and they only can pull out like 100 grand. They're calling these big shops and they're telling them, "Hey, just refinance the full thing and
No.
at like a
Oh,
6%, at like a 5.5%, right?"
that's horrible advice. Horrible
It
advice.
and unfortunately, a lot of people I think are looking at that because temporarily it looks like in some cases the payment might be slightly lower on a 5.5 versus obviously if you get like a 8% or seven and a
Yeah.
half
Second.
second,
Yeah.
right?
Hmm.
On top of your first payment. So it could temporarily look worse. However, the long-term effect that you're not realizing is you can pay off that 100 grand, right?
Exactly.
You might and still have that first of 2-3%. You
Yeah, I'm
can't do
glad
the
you brought
same
this up.
thing.
I'm so
Yeah.
happy you brought this up because again, I believe with every fiber of my body, we're about to have half a trillion to $1 trillion hit our economy in the next year. But you're absolutely right. You can go get that money in a couple of different ways. And folks, you need to do it the right way for your family. If you're going to this body shop, call center nonsense, and they're telling you to refi the whole thing, it's probably not the right idea, right? There are times where it's mathematically the right thing to do, but not all the time. And you need to go to an advisor that's going to do the math for you and go, hey, did you know? Did you know if you kept the mortgage and did this, you would come out a winner? I'm so glad you brought that up. But at the end of the day, we're going to have another $1 trillion floating around in our economy because home equity. And it's, what's crazy? Even if it's a trillion, it's 2% of home equity.
Yeah. Wild.
Wild. Well, the
Yeah.
other thing, the other thing that we are seeing, because again, I do think the refi boom has started. Marry the house, date the rate stuff, rate term. Also, home equity is being extracted increasingly. But you guys brought to our channel a 499 product the other day, like last week or the week before. Is it still available? Is it dead and gone? What's going on 499?
499 is still available, but when we talk about these things, it's funny because people always try to wait a little bit. Again, fire drill, wait a little bit to see what the market's doing. Are people moving? And then we get inundated with calls, and the people that ask us are like, "Oh, it's I don't really want to buy down. I don't really want to do this." And when that happens, what they don't realize is when the margin squeeze happen, it's a short period of time. A lot of
Mm-hmm.
times. And it's like when we talk about it, it's a window we found in that moment. And if that window is gone, unfortunately, that rate is also gone in terms of buying it down that far. So
Yeah.
now buying down to 499 is a lot bigger on a 30-year fixed basis than is like, for example, an ARM. If you want to do an ARM, so you could still probably get there, very easily, right? Like
Yeah.
within a point still. So that's where the squeeze is happening now. But on the 30-year fixed basis, that margin has widened.
Yeah, of
And where
course.
we've seen it kind of close in is we've been putting a lot of clients into like low five, mid five, so like 5.3, five
Yeah.
five, five
Still not
six
bad.
on primary without having to buy down, right?
No
And
points?
so without buying down. But
Wow.
here's the caveat that we like to say, right? We don't bake any margins into the rates, right? So when in the conventional world, Fannie Freddie, everyone has the same rates, right? But the biggest difference of obviously we saw a lot of comments and people didn't like how we can offer something that they don't, right? The only reason that happens is because Dustin and I, we, obviously own the company Combo as a brokerage, and we have the ability to kind of spray it out everywhere and get a lot of rate
Mhm.
sheets and whatnot. But because we know our clientele and because we want to provide the best terms possible, we don't bake anything in. There's nothing extra margin baked in. So
Mhm.
we only make our origination aspect, but everything else in terms of the rate itself is not in there.
Cost.
So we're not, it's the
Yeah.
cost is, it's not in there. So what that means is you are going to get the lowest rate possible,
Yeah, let me
right?
let me
And if you
let me
want,
say it
yeah,
let me say it my way. And again, push back, correct all of that. Again, I've been borrowing money for 3 decades. I've worked with mortgage brokers for 2 decades. And what I see across the board is you know what, Jonathan, you guys are in business to make money. I don't think that should shock anybody. In the mortgage industry, you typically decide as a business, i.e., the owners, you and your partner Dustin, how you're going to do that. And I would argue that most brokerages bake it into the rate because that allows them to hide it, hide the profit from the average borrower. That's why when we did that 499 video, a lot of mortgage brokers chimed in saying, I'm not seeing that on my rate sheet. Yeah, no shit, dumbass. Your brokerage is bearing the cost in the rate. What you guys have chosen to do is give the lowest possible, but you guys have an origination fee that pays for your overhead. It pays for your people. It pays for your business. And it's a flat rate. So you make the same thing on either loan. And I think a lot of people miss that, especially if they're doing a smaller loan because it looks egregious, right? When they go, oh my God, I'm paying 3 points. Well, you're
yeah,
paying an origination fee, which would be the same
yeah,
if it was 150 or 350. And
exactly.
that's just your profit. Now, in the grand scheme of things, in the total book of business, Convoy is losing. The people that bake it into the rate are making more money. But that's not your chosen business model. But yes, some people get upset when they see that line and they're like, well, that's not appearing on my other sheet. Well, that's because they're burying it in the rate and you don't see it as a normal consumer. Do I have that
Yeah,
at least somewhat right?
absolutely. And on top of that, I would like to add, we always have the option to bake in like everyone else
Yeah.
too,
Yeah. If you
right? So
really
if
want
you,
it.
yeah, if you really want to, like us to credit everything back, like we can do that, right? But I always explain to clients like everyone makes money. It's one of two ways. It's either in the front or in the back, right? And
Right.
and over the long run, if you are really truly making a long-term investment, it's always going to be better to front load a little bit than
Yeah, of
back load
course.
it for the entire 30 years, right?
Yeah. You
Um,
don't want it. You don't
so
want to rate. Like if you're doing a set it and forget it loan, you don't want to carry an extra 0.5% for 30 years. You would
exactly.
rather pay the $3,500 line item one time and get something half a point lower. It's just that
Yep.
most brokerages have chosen a model to hide it from the average consumer and not tell them that they're eating an extra half because that's where the profit is. Everybody eats in
Mhm.
this business.
Yep. And
Yeah,
what
it's
they don't realize is if you're actually trying to do that set it and forget it model that we keep talking about, which now you can get to in the low fives, DSCR, buying it down into five and a quarter, 5.3, like which you can do. If you do something like that, you don't want to take a 0.5% higher for the
no.
30 years if it's like a K or $2,000 cheaper. You want to take the lowest possible and really truly set it and forget it, right? And if
Yeah,
you are
yeah,
doing a
exactly.
cash out refinance and you're coming from, a 7.5% from 2 years ago, right? And you can buy it down to 5.375, then you're going to do that and you should do that and set it and forget it for the long term for when you have the
Yeah.
property. So and then also the biggest thing too is Dustin and I like we are always working to try to find new products as we constantly
Yeah,
bring into the
that's the
channel.
unique thing about Convoy is a lot of the
Yeah.
investors I work with have the same products they've had the last 4 years. It's kinda like, "Hey, here's a Chinese menu," and it never changes. What I've seen you and your partner do is you bring in new products probably shoot, there was a moment in time where you were bringing stuff monthly, right? So that's just
Hmm.
kudos to you for, and again, you're working with Wall Street and all these other folks to try to put these together for clients. So, that's not easy. That's not cheap. So, kudos to you for trying.
Yeah, absolutely. But that's I think what our passion is in terms of, especially with the investor community. That's how we're able to find these products that people are like, "What the heck are you talking about? This
Yeah,
doesn't exist." And we're like, "No, it does. We just went out and found it, and we
right.
brought it here." Yeah.
Yeah, and that's why you can bring new products like the 499 and people say it doesn't exist because A, you're not trying to hide cost in the rate, and B, you found a Wall Street player that was game. And the other thing about this 499 or other products is it can be gone in a minute, right? You could get
Hmm.
so much activity that Wall Street goes, "Oh, wait, whoa, stop, slow down." Right? We have seen times like that where and then the rules change. Oh, it's not, it's no longer 499 for a 150K loan. It's 499 for a 300K loan.
Hmm.
And, so rules like that could change in an hour. And, that's very
Exactly.
different than a conventional lender that's like, oh, I got a rate sheet and everybody fits in the same box, right? DSCR is very different.
Yeah, and on top of that, I think right now, especially in this fluid market, this is almost like if you're trying to get a loan, this is almost kind of, I would say, the worst time to try to get a loan, right? In terms of
Mm.
like just mentally stress wise,
Yeah.
because you're
Yeah, all
seeing,
the options.
yeah, you're
Yeah.
seeing headlines here, but then your mortgage broker is telling you rates actually went up and not down, but you're seeing on Yahoo Finance that rates went down, and
Yep.
you're like, what the heck is going on? Like you're mentally more stressed during this time.
Yeah.
What I always recommend, I think during this time is more so trust the professional, whoever you're using, right?
Yeah.
I'd say you probably
Get
trust
most, yeah.
them. You
Call a couple,
you
call a couple. Yeah.
yeah, and trust them in terms of where the market is actually doing, and if you see that a lot of them are telling you the same thing, that's probably what is going on, not what the news is telling you.
Yeah.
And there's gonna be moments like, for example, right now, if you're in a primary home type thing, and you're trying to buy something or cash out or refinance in general, you can get a 5.3, 5.5 pretty
Yeah.
easily.
Pretty
And
easily.
if that's the case and you want to jump on that, then you can jump on that. This is the moment, right? Don't wait till the Feds talk next week because then you don't know what'll happen, right? I mean,
Yeah, you don't.
it
We've
can
learned
things
that
can
lesson, right? It could change in a minute.
yeah. And the trajectory of rates over the next 2 years, do we expect them up or down? I mean, obviously, where trajectory is like, down, but
Not
the
quickly.
actual yeah, the actual time frame for what people are expecting, we're already at the end of the year basically,
Yeah, we
right?
are. Yeah, we are.
So, is everyone now expecting rates to drop from, let's say, 6% without buying down to 4%, right? That's
Oh,
not happening in
not
the next
happening.
2 months,
No,
3 months.
no,
Yeah.
no,
So,
no. Mm-mm.
if you're making a plan for right now, and you made a video too about the buyer's market kind of slowly exiting out,
Yeah,
right?
yeah,
Th this is kinda like, if you were to make a move and you wanted to do something like that, this might be the last opportunity you have before the rest of the herd starts going in even further
yeah, yeah. The herd
to
is
try to buy
rumbling.
everything up.
The herd is rumbling.
Yeah.
They're out there, and it's really funny because again, as we opened, I think we're going to see a refi boom. I think mortgage has been in a depression for 3.5 years. I think it's over. I think this is not a blip. I think this is a boom that's gonna run for quarters at least. And I really think I really do believe that we're about to see $500 billion at least extracted from asset owners and homeowners. What I'm worried about is where does that money go? Right? Does it go to the third car? Does it go to that crazy vacation? Does it go to pay credit card debt? Or do people put it away for a rainy day or invest it? But at the end of the day, it doesn't matter. Cash out refis are coming. Consumers who bought 5 years ago have been sitting on records amount of equity. And if I've learned anything about consumers, they are going to line up at that ATM and go get some money. That's what I
Yeah,
think is going to happen.
absolutely. But
Yeah.
just be smart about it, right? When you do
Yes,
it.
please
So
be
again,
smart.
second, the opportunities for both, right? Both make sense in different scenarios. So just make
Correct.
sure that it is the correct scenario. Don't let someone push you the wrong way.
Yeah, work with a lender that's going to do the math for you. Like, what's better for me? Should I just go get 50K as a home equity line? Or given my loan balance and whatnot, I should just do the whole thing.
Mhm.
Work with a broker that's going to do the math instead of a call center body shop that's going to slam you on the one product because that's the tool of the day. If somebody wanted to get started, Jonathan, with Convoy, what do they do?
Go to convoyhomeloans.com and let us know you came from ORaaT. Or a lot of people have been emailing too, so info@convoyhomeloans.com.
Tell them you came from ORaaT. Why? So you get to talk to this young man or his partner, Dustin, instead of being stuck in a queue. Nobody likes to be in a queue. Thanks, buddy. Take care.